All right, coffee prices have soared 80% in the past year, up 200% in the last year and a half. Well, our next guest says that rally may soon stall. Spencer Patton is founder and chief investment officer of Steelvine Investments, a hedge fund which has 80% of its assets in commodities. He joins us now from Nashville, Tennessee. Spencer, thanks so much for joining us on this Friday. And like any, I mentioned, sleep-deprived consumer of coffee, we're always happy to hear that coffee prices are going to fall. Explain just by how much and when the consumer will actually see that in their coffee prices.
Right. So what's going on immediately is consumers are probably going to see a price hike in the near future. We've been seeing major manufacturers of coffee start to raise prices. Folgers has raised their large barrel drum that you can find in your grocery by about 20 to 30%. And that's going to happen really soon. We've seen the K-Cup manufacturers also start to raise their coffee prices. And so there's probably not going to be any relief for any time in the near future. If anything, we're going to see prices go higher from here, just simply because, as you mentioned, coffee prices are up some 200% in just 18 months.
When do we start to see coffee prices actually fall, and what has to happen for that to start? I mean, is this about really managing supply? Is this about just really bad crops?
You know, it's actually, last year in Brazil was the largest harvest for coffee since the world has been turning. It was 58 million bags of coffee were harvested, and the problem is a lot of that coffee has not made it to the market. What we've been seeing is the producers of coffee over in Brazil and Vietnam have been holding on to the coffee bags in an attempt to kind of create an artificial spike in coffee prices. So it's really not unlike the OPEC cartel in that we're seeing coffee being held on to try to get the highest possible price, and then once that price is reached, you'll likely see a flood of coffee come onto the market. And I think we're very near that point, because coffee can't be held on to ever. I certainly don't like stale coffee beans.
Spencer, I do want to talk a little bit about sort of the analysis you've done on coffee and when it actually falls. I think you were saying if it falls below $2.62 a pound, that's going to break through, I guess, and indicates that it's going to get much more bearish from there.
That's exactly right. We're at a critical level just right this second. Coffee prices close at 1 o'clock Central, 2 o'clock Eastern, and it is right at the breaking point of breaking the neckline of what's known as a head and shoulders pattern on the charts. And if we break below 260, we would probably see prices move to about $2.25 a pound, which would be about a 15% pullback on top of an already 10% decline that we've had from the highs. I was mentioning about the cartel. Once we see prices fall below a certain point, you're going to see producers start to look at each other and say, I'm going to go ahead and sell my coffee. I don't know about you, and you will see a deluge of coffee come onto the market. And I think that you could see prices fall very rapidly. Maybe even by the end of April, we could reach that $2.25 mark.
And you made the point, it's because, you know, this is not an inventory that they can keep for infinite periods of time. They do have to sell it
Right.
sooner or later.
That's exactly right. It's got to go. And so it's really a game of chicken, is that the producers are going to be deciding at what point can I lock in these prices, because they've already, in my opinion, missed the high, which was at about $2.96 a pound. Here we're at about $2.62 right now. So it's the time is running out to lock in good prices. So I think it's going to be happening very soon.
Spencer, let's quickly talk about gold. Today it's down about $4, trading at $14.28 at the moment. Where do you think gold is going to end the year?
This has been an amazing day for gold and silver, because at the beginning of the morning, gold was down about $20, silver was down about 80 cents, and so it's clawed its way all the way back, and that's a bullish sign for gold. It's going to remain volatile. I think silver will be even more volatile, but I think that gold could be peaking its head above 1,600 to 1,650 by the end of the year, which would be another solid year for gold.
What would change that if we started to see significantly worse corporate earnings? I mean, where do we start to see gold actually fall?
Yeah, what's scary is right at the end of June, when we get to the end of quantitative easing number 2, Ben Bernanke has a very important decision to make. Either extend the quantitative easing to another round, which would be very bullish for gold prices because it would drastically weaken the U.S. dollar, or if they decide to conclude quantitative easing and even start talking about raising interest rates, then you very well may see gold and silver take a real haircut. So that's kind of your fulcrum point in the year of whether we're going to see prices move higher or lower. But but I think we probably see prices move higher at least till June.
And what about silver? You're saying you think about 15 to 20% by year end, but really tied in terms of what could potentially swing the pendulum here, tied to the same events as gold?
Exactly. The one thing that's unique about silver is silver has a lot more industrial use than gold. Every iPhone on the planet has silver in it. Most of your electronics do. And unlike gold, every ounce of gold that's been harvested is still on the planet Earth. But when silver is used, it's gone. There's no replacing it. And so you have a different supply situation with silver, which should be bullish long-term fundamentally, which is why I think you could see silver in the $45 range by year end. But I think it'll be a very volatile and bumpy ride to get there with moves of 5 or even 10% in a single day.
Spencer, when you think about various global events, whether they're geopolitical events, whether they're natural disasters, what's going on in Europe, what are the 3 biggest factors in your investment thesis, or things that are major concerns for you that would change the way you're investing currently?
Right. So one major factor is right here at home with the U.S. dollar. That is the first point that you have to look at, because if you see a drastically weakening U.S. dollar, that's going to lead to commodity price inflation, which is a serious issue. And that kind of brings me to the second point, corporate margins. We're seeing corporate margins already being pressured by higher commodity prices. So companies just like Hershey announced a 10% hike in the price of candy, and that's going to impact demand. People will buy a little bit less on the margin. And that's never good for corporate policy and corporate practice. And the third thing is you have these black swan events, these Fukushima plants in Japan that are nearing a full meltdown.
Spencer, I'm sorry, we got to leave it there. Thanks so much for joining us.